FIFO versus LIFO versus tax lats versus other options when selling. It's very important you pay attention to this. So if you ever decided to sell a stock and then a list of options came up in your brokerage account, so FIFO, LIFO, average cost, and potentially other options, many investors click right past this screen without thinking, and this is a mistake. Paying attention to this could be worth thousands of dollars on a single sale. The shorter answer, ideally you review your tax lots before every sale. Some brokers make this easier than others. So let's go a little deeper into this. Before you make your next trade, figure out these three things. Number one, how to view your tax lots. Can you see each purchase with its date, cost basis, and current gain or loss? Number two, how to sell specific lots. Does your broker let you choose exactly which shares to sell, or are you limited with preset methods? And number three, what the default is if you don't actively choose. So what method does your broker use if you just skip that screen? And usually it's FIFO, which means first in, first out. Ideally, your brokerage has an option where it does the calculations for you and shows the most tax efficient choice, but it's always good to double check. So be very careful with the default option. This could easily result in you paying more taxes than you should with just a click of a button. Some brokers let you change the default setting. Others offer an automatic, most tax optimized option that handles it for you, which is good. Why does this matter? Let's go through a couple real world examples. Example number one, when FIFO costs you money. So FIFO is first in, first out. You bought the same stock at different times over several years. All your purchases have gains, but your oldest shares bought years ago have the biggest gains. If you sell using FIFO, first in, first out, you sell your oldest shares with the largest gains, and that equals the greatest tax bill. The better choice in this situation is to use LIFO, last in, first out, or highest cost first. Sell shares with the smaller gains first, and this equals lower taxes. Important note, you also want to consider long-term versus short-term gains in this case, because short-term gains do have a higher tax rate. So you want to make sure to emphasize longer gains first, short-term gains second. In this scenario, the difference could easily be $2,000 to $5,000 in taxes on a $50,000 sale. Example number two, when LIFO wastes valuable losses. So your stock has mostly gone down in price. You have the biggest losses in your earliest purchases and the smallest losses in your latest purchases. If you sell using LIFO, you sell your most recent shares with losses first, but they have the least tax benefit. The problem is you should be selling your losses with the most tax benefit. In many cases, that means FIFO instead. Again, note, you also need to consider whether the positions are long-term or short-term due to higher tax rates for short-term gains. The optimal strategy might be sell your short-term losses first due to higher offsetting value, then your earlier long-term losses, then your more recent long-term losses. The optimal choice in most situations, no matter what though, is review your lot specifically rather than relying on automatic methods. So example number two, when LIFO wastes valuable losses. Your stock has mostly gone down in price. You have the biggest losses in your earlier purchases and the smallest losses in your latest purchases. If you sell using LIFO, you sell recent shares with losses, but they have the least tax benefit. So the problem is you should be selling your losses with the most tax benefits. And in this case, that means FIFO instead. So first in, first out. Again, note, you need to consider whether the positions are long-term or short-term due to higher tax rates for short-term gains. The optimal strategy may be sell your short-term losses first due to higher offsetting value, then your earlier long-term losses, then your more recent long-term losses. The optimal choice, though, always is to review your tax lot specifically rather than relying on automatic methods. Example number three, the volatile position. Your stock has gone up and down significantly, so some of your tax lots show gains and others show losses. So it's critical that in these cases, you review your individual lots. Neither FIFO nor LIFO will work. The best approach is to sell the lots with tax losses first, tax loss harvesting, or the lots with the smallest gains. The worst approach is to blindly sell using FIFO or LIFO without checking. Now here's the problem. Not all brokers are created equal when it comes to tax optimization. Some make it easy to see every lot and choose exactly which shares to sell. Others force you into using FIFO and give you zero control. So check your default setting. Most brokers default to FIFO if you don't actively choose. Some let you change this default in account settings. But even worse, Some brokers don't give you any choice at all. You're stuck with FIFO no matter what. And this can cost you thousands of dollars in unnecessary taxes. So your action steps: number one, log into your broker and find out where tax lots are displayed. Number two, make a small test trade or go through the motions without completing it to see what lot selections appear. Number three, check your account settings for any cost basis method preferences. If your broker doesn't offer a good lot selection, strongly consider moving taxable accounts to a broker that does. This matters less for retirement accounts where there are no capital gains taxes. But the bottom line, every time you sell in a taxable account, ask yourself, which specific shares am I selling and what are the tax consequences? That one question answered thoughtfully can save you thousands of dollars per year. That's money that stays invested and compounds for your future instead of going to the IRS. So don't let your broker's default setting make this decision for you. Advismo is working on all these things to do them automatically for you and help you optimize your taxes and returns effortlessly. More to come.